Welcome back to the channel, everyone. As promised, I'll be giving an update on Proterra or ACTC stock, as I've been looking into the company and the merger a little bit more and actually have decided to start dipping my toes in and invest a small amount into ACTC stock. I'm going to show you my valuation based off the projected growth that Chamath and Proterra provided, as well as show you a 10-year valuation model where I added some assumptions of my own to get a better idea of the fair price to buy Proterra stock today. As you will see, there is a significant margin of safety at the moment. We will get to the projections and how they were calculated in a moment, but firstly, let me just give you the fair value or intrinsic value for the stock today, and then the expected return, and we can retrace our steps on how we got there. So if I focus in on the DCF here, as you can see, we've got a fair value today of $41 per share based off of the growth rates that Proterra and Chamath have given to us, and then that's with a 15% discount rate, so quite a high discount rate that reflects the risk involved here. That's a 4x return as well in 5 years, so a very good return from that. As you can see, the share price is $24 per share at the moment, just under $6 billion in total combined market cap for the merged company. So there's about 68% upside, or it's around 59% undervalued. What's quite compelling is that even with a 40% margin of safety applied to that, we still get to a fair price that matches the stock price today. Now, that tells us that if there is anything wrong with this valuation on the downside, then it's still likely we will meet our minimum rate of return of 15% that this discount rate sort of protects us with. Okay, now let's talk about the projections that get us to that fair value. We've already covered these 5-year projections you're looking at in the previous Proterra video. And on that note, if you are unaware of what Proterra is, what products it sells, etc., you should probably watch the previous video. This video is going to be focused on the value of the stock today and its growth in the future. We also covered Chamath's investment thesis for this stock, which he shared on Twitter, so go and watch that if you don't know anything about Proterra already. They are currently at under 200 million in revenue, and they are projecting they can get to 2.5 billion by 2025, which looks like a huge jump on the face of it. After all, that is 66% annually. But actually, when you consider some of the variables and tailwinds that Proterra has behind it, these numbers look quite easily achievable. And I've got 3 of the visible tailwinds here written down for you. I say 3 visible because there are more. I just want to focus on these 3 for now. Mainly the middle one, to be honest with you, because it gives us some clarity around the potential for revenue growth over the next couple of years. I'll start from the top though. So they've got market expansion and they currently dominate that market as well. So the North American EV bus market is expected to grow at a 50% rate for the next 5 years. And this seems likely given the zero emission targets from various states and communities in the US. Proterra currently have 50% market share, meaning they should take the lion's share of that growth. And because of some of the value chain dynamics that they have, it's possible that they could take even more than 50% market share into the future. This one, obviously, I feel is the most important, especially for near-term revenue growth. They have really high demand for their products with 750 million in current backlog, which they disclosed in their investor presentation, and Chamath spoke about it being a big thing for him. That with current revenue at 193 million, this shows a clear path in the short term to $1 billion in revenue, which is why I say that 2.5 billion in 5 years doesn't look unlikely. Lastly, favourable economics. And this is important because their gross margins aren't great at the moment with 25% gross margins. We covered that in the previous video. Doesn't leave loads of room for the bottom line, but electric battery costs are declining rapidly with costs forecasted to reduce at 8% each year for the foreseeable future. EVs also have 40% lower operating costs versus the likes of diesel. So all of these factors will contribute in the long term to lower costs of production for a company like Proterra. So there are favourable economics there, and these are 3 of the main tailwinds which I see. So hopefully with that, that gives you an idea of why I'm actually quite confident in these numbers. If you're not familiar with the numbers, let's quickly walk through them before we touch on the terminal value. 66% top line growth rate for 5 years. EBITDA margin expected to get to 20 or 21%, Chamath put in. And free cash flow margin expected to get to 15% as of 2025. So, not huge bottom line numbers, to be honest with you, but revenue growth is obviously very strong. And that the main reason that they're projecting that is because of the high demand that they're seeing and the switch to electric vehicles from regular transit buses. One thing I will say is that we shouldn't just be taking, say, management and investors in Proterra and Chamath, taking their word for what the projections will be or what the growth will be in the future as definite. They could easily be wrong. And also, they do have incentives to feed a bullish story to potential investors, especially when they're in the public market. So we do have to keep that in mind. But they are in a position where they are the most suitable people to ask, what will the next 5 years look like? And all we can do is really do research and analyze the company, analyze the market, and see if those projections seem likely. In the case of Proterra, I do actually think they seem reasonable. Shares outstanding, I forgot to touch on this. So they actually disclosed, and we went over this in the last video again, that there will be 240 million shares outstanding for the combined company, and they'll be priced at the ACTC stock price. So it's fairly easy. We can work out a market cap today and a fair price in the future, or market cap, or share price in the future, just so long as we don't get diluted over the next 5 years, which we don't know whether we will, don't know whether we won't. So it's hard to judge on that. I've just kept it as flat for now. Terminal values. This is obviously an important part of the valuation. I think I've been fairly conservative here, to be honest with you. I've gone with a 10 times sales as one of the terminal values, which is conservative when you consider they're going to be growing at 77% on Judgment Day. So 10 times sales, it probably won't be that. I'd expect it to be higher if these projections play out, but I've kept it to have an element of conservativeness. And then similarly with the EV to EBITDA number, I've gone with 35 times, which again is very conservative considering that earnings are going to be growing at around 180% over this period here. So that PEG ratio will be way below 1. So I'd expect it to be a lot higher. But again, there's an element of conservativeness which I like to keep in there. And that gives us a market cap of 23 billion when that's averaged out and the cash is added back in 2025. And as we covered earlier in the video, that gets us to our fair price today of $41 per share with a huge margin of safety. And as I mentioned, I've been conservative in the multiples, I feel, which is one of the reasons why I'm very bullish on this company going into the future. Okay, if we just look at the 10-year valuation, which I've done now, you can see this split down the middle. That shows my 5-year projections following the one that Proterra and Chamath gave to us. Firstly, growth. I've slowed it down quite a bit, to be honest with you. I've just dropped it to 35% and then ending on 25%, which is still around 30% for the entire period, which is a very good growth rate. It gets them to 9.3 billion, which isn't actually a huge number for a company, to be honest with you, as a public company anyway, although we do have to be careful because they're going from almost 200 billion to 9 billion in the space of 10 years, which would be a very big ask. I think we consider all of the factors like their domination of the market and how much the market's going to expand over the next 10 years. I think this 9 billion number is quite easily achievable for them, depending on whether they remain the dominant force in this EV bus market. EBITDA margins and free cash flow margins, I've just kept them the same as what they are projecting in 2025. Not saying that they get bigger with scale, which, to be honest with you, they probably will do. Cost of production is set to reduce over time, which will make the gross margins better, which will in turn improve the bottom line margins because their operating efficiencies are very good. We looked at that in the previous video, but I've just kept them the same. And hopefully that adds an element of conservativeness again in this 10-year valuation. Our terminal values, I've brought them down on these ones. So EV to sales of 5 times here and an EV to EBITDA of 25 times, which if they achieve this 10-year growth projection, then it's very unlikely they would be selling that cheap. That is a very cheap multiple for a company still growing at 25% and that had been growing over 66% for the 5 years before that. And it gets us to a market cap of 46 billion or 47 billion when averaged out and the cash is added back in. Which actually, if we compare it to some of the companies that are out there, some of these EV companies, it's a small market cap. It's not a huge one. It doesn't stand out, especially considering in 2030 when EV companies are going to be a much bigger part of the world than they are now. If we get into the DCF, this 10-year valuation, as we let the growth play out and the story play out a little bit longer, we actually get a better share price or fair value today for the stock. So this one's telling us the fair value is $48 per share based off a 15% discount rate or 11.5 billion for the entire company. That means that there's 94% upside currently in the stock, and that even with a 50% margin of safety, we would still get to the share price today. And for me, this is brilliant because it just shows that even if we're off by quite some way in these projections, it's very likely that we're still going to achieve our required rate of return of 15%. That's just how the margin of safety works. And that makes me quite comfortable with at least dipping my toes into this stock, doing some more research, and just finding out how confident I am that it will be able to achieve these projections over the next 5 to 10 years. Okay, guys, so that is my valuation for Proterra, or ACTC stock we should be referring to at the moment, and that should merge in the coming months should everything go to plan. So hopefully that gives you an idea of why I think the stock's undervalued and why I've been dipping my toes in. And in regards to Chamath's investment thesis, I thought it was actually one of his most convincing investment cases that he gave for all the recent investments that he's made, including SoFi, Clover Health, Open Door, and even some others, that aren't just SPACs. This one has been really convincing. I mean, the numbers that were put out with the investment thesis, the growth numbers, the domination of the market segmentation, the fact that it doesn't have much competition, it owns every part of its value chain. All of these factors just pricked my ears up and made me think, God, I need to look into this company a bit more. But there you go. That's just my 2 cents on it. Let me know in the comments below what you think of Proterra or ACTC stock. I know some of you do really like it and are invested already. So make sure you let me know what you think of my fair value or my valuation of Proterra. If you enjoyed the video, I would appreciate if you could leave a thumbs up. Subscribe to the channel if you haven't already. And I will see you in the next video. Good luck with all your investments.